Hello and welcome to this Tolley Seminars Online lecture, where I'm going to be looking at the outcome of a recent case, Knight and HMRC, tax case 5544. And this deals with and reminds us of the rules that apply to calculating the capital gain realised by an individual on the disposal of a foreign asset. Now, the facts of this individual case was a discovery assessment was made in respect of Mr. and Mrs. Knight's disposal of a property in Switzerland and associated disposals for not including this on their relevant tax return. The property was purchased by Mr. and Mrs. Knight in 1988 for a price which was paid and agreed in Swiss francs. The property was then sold by Mr. and Mrs. Knight in January of 2010, and they received the consideration in Swiss francs. And they also paid out associated disposal costs, also in Swiss francs. The matters at dispute was the method for computing the gain realised on the disposal of the property. Mr. and Mrs. Knight contested method A should be adopted, and that is where the gain should be calculated in Swiss francs and then translated back into sterling at the exchange rate on the date of the disposal of the asset. However, HMRC contested that all appropriate receivables and payables are translated into sterling on the date of each transaction, producing a gain in sterling. So what Mr. and Mrs. Knight was saying is that you do all the calculations in Swiss francs, and that works out the gain, and it's the gain you translate back into sterling at the date of the disposal. Whereas HMRC say, no, you compute the whole calculation in sterling by translating each individual line item based on the exchange rate relevant at the time of that transaction, and that produces you a gain in sterling. Now, we need to remind ourselves of essentially what are the four steps that take place here in dealing with the disposal of a foreign asset. The first is that if you are, for example, in this case, you live in the UK and you're buying a property in Switzerland, you will need to acquire the appropriate foreign currency to pay for the asset. In step two, you will then dispose of that foreign currency and replace it with a chargeable asset. In this case, this was the property owned by Mr. and Mrs. Knight in Switzerland. Thirdly, when you come to dispose of the property, and you will then turn your property into the foreign currency. So in the case of Mr. and Mrs. Knight, they disposed of their property in Switzerland and received a whole load of Swiss francs in their bank account. And then finally, you dispose of those Swiss francs in the foreign currency and translate those back into sterling. Now that is logically exactly what has happened on each of those dates. So it naturally follows that the tribunal's decision that follows those four steps is that the method B is the correct method of calculation, because of course the amount it actually costs you in sterling is relevant based on what the date of the transaction, and it's the date of the transaction that determines the exchange rate that you use. And therefore, unfortunately, Mr. and Mrs. Knight lost their case. And what this really shows is that perhaps for the lay taxpayer, tax doesn't always work as logically as you may think it might. Well, I hope this is a useful reminder of the rules that we use for calculating the gain on the disposal of a foreign asset, and sets out nicely the decision in the recent Knight case. Many thanks for listening. My name is Chris Jones, Director of Tax Markets at Tolley.